Here we go. So for those of you that don't know, I've been a police officer for over 19 years. I did 11 years in the city of Detroit. I've done quite a few things other than police work. I used to be a securities broker, which means I sold mutual funds, life insurance, annuities, things like that. Now, what's interesting about that is I knew what fiat currency was 15 years ago, before I got into the securities broker business. So what is fiat currency? I'm going to get into that, but I knew what fiat currency was, and my reasoning for getting involved as a securities broker. Many of the people I work with have something called an ICMA, 401k, 403b, things like that. I was still involved in a mutual funds. I still owned, at the time, personally owned mutual funds. So that was my reasoning behind that was, well, I wanted this opportunity that this company was offering. It was a very large company. They probably to this day sell more mutual funds than any other company in the world. But I wanted the opportunity with the company, and I figured if mutual funds are good enough for me, they're good enough for everybody else. So I got involved, even though I knew what fiat currency was. And the information I'm going to go over you guys may not catch it right away. You may have to do some digging yourself to investigate, because I was somebody that knew what fiat currency was, and I still got involved in the fiat currency business. There came a point where I just couldn't do it anymore. My faith in fiat currency it just totally disappeared. It was gone. And to this day, I do not believe in fiat currency. So I have always wanted to get involved in the gold and or silver business, and here I am. So let's talk about what fiat currency is and what debt instruments are. Okay, this stuff is super important. You know, you guys out there that know securities broker stuff, you know what securities are, you know how money works, how mutual funds work, you know what I'm talking about. I just had a cousin recently pass some big test for his financial planning career. I work with, I know people in the securities broker business. So you guys know what I'm talking about, but let me just read something to you. I'm going to read to you the definition of what fiat money is. Fiat money is a currency without intrinsic value that has been established as money, often by government regulation. Fiat money does not have use value. It has value only because the government maintains its value, or because parties engaging in exchange agree on its value. It was introduced as an alternative to commodity money and representative money. Commodity money is created from a good, often a precious metal such as gold or silver, which has uses other than a medium of exchange. Such a good is called a commodity. So, fiat currency, this stuff right here, is what they're talking about. This is U.S. currency right here. This is our green money that we use every day. We save it in banks, and we invest in it in mutual funds and stocks and bonds and things. And this is what they're talking about. It has no intrinsic value. Look that up. Think about that. It has no real value. So, what else is this? What else are these green dollars? It's also a debt instrument. Okay, a debt instrument is a paper or electronic obligation that enables the issuing party to raise funds by promising to repay a lender in accordance with terms of a contract. Types of debt include notes, Federal Reserve notes, okay, bonds, debentures, certificates, mortgages, leases, and other agreements between a lender and a borrower. So, what we're dealing with in America and across the world is a fiat currency, no intrinsic value. It only has value because the government says it does, and because We still accept it, okay? And other countries around the world still accept it, but hey, that's also changing. Other countries are looking at alternatives other than accepting the US dollar. So it's also a debt instrument, which means that, is there really any value in this? A debt instrument means that someone is owed some money. This is not value really, because it's debt. This is debt. This represents debt, money owed to someone. So you can dig into fiat currency and debt instruments more yourself. Hey, feel free to message me, okay? Facebook Messenger, text, phone call, whatever, if you have any questions. But look into that, okay? Because this is something that's very interesting and extremely valuable, okay? To understand how our monetary system works in this country and abroad, okay? All the other monies around, all the other currencies all over the world are fiat as well, okay? They have no intrinsic value, okay? All of them, okay? So let's go on and talk about the alternative. What is the alternative, or what is real money? I have some articles printed out here, and I'm going to read a little bit of. I'm not going to read them all. And this is from Business Insider, February 11th, 2019. Central banks are buying the most gold since the end of World War II. Here's why. Do you hear that caption? They're buying the most gold since World War II. Here's why. Central banks have bought the most gold since the end of World War II, with the commodity becoming an increasingly valuable hedge against growing global instability. This is just not an American thing. You know, the U.S. currency is the world's money reserve. It's right? When our money is affected, everybody else's money is affected. The near record buildup in government debt globally, particularly in the U.S., we are over, what is it, $22 trillion in debt now? What does that mean? What does that mean when we live in a country where our country is $22 trillion in debt? What does that mean? I mean, I think it means bad news. That's what I think. The near record buildup of government debt globally, particularly in the U.S., makes other perceived risk-free assets less attractive. Gold is seen to have returns similar to equities in the current cycle, and a dip in supply makes it a more valuable asset for central banks and investors alike. Central banks have been buying up gold at the rate not seen since World War II, as concerns about geopolitics and the strong dollar see a shift in appreciation for the quintessential risk-free asset. They're talking about gold, quintessential risk-free asset. It goes on later to say, beyond just the threat of inflation, it is also remarkable that for the first time since the end of Bretton Woods, and you guys got to look that up, Bretton Woods, that's basically where we were on the gold system. We were backed by gold, and Richard Nixon in 1971 took us off the gold standard. Indeed, since the end of Second World War, central bank buying of gold has actually increased. Equally, the case for gold purchases is boosted by the near record levels of government debt in the U.S. A lot of this comes right back to us, the U.S. It's a global problem, but it comes back to America. As well as its value related to inflation, gold is likely to see demand increase, while supply will stay flat at best, Bernstein said, boosting its value to central banks and investors alike. So, here we have central banks that are printing, listen here, the central banks are printing this, suggesting that we save it, suggesting that we invest in it, and yet they are investing in gold. This is a piece of Carrot Bars gold. There's a little piece of gold right in the middle. That's 1 gram of gold, if you can see that. Okay. Yet they're investing in gold. And they're not recommending to us to invest in gold, but that's what they're doing. Let's go on to the next one. Is somebody timing me? What countries have the largest gold reserves? Wow, check this out. This is from Investopedia, August 31st, 2018. The United States holds the largest stockpile of gold reserves in the world by a considerable margin. In fact, the U.S. government has almost as many reserves as the next three largest countries combined: Germany, Italy, and France. The International Monetary Fund is reported to have more gold reserve than Italy, but less than Germany. Gold has served as a means of exchange to varying degrees for thousands of years. For much of the 17th to 20th centuries, the paper money issued by national governments was denominated in terms of gold and acted as a legal claim to physical gold. It goes on to say, governments still house huge stacks of bullion, which are measured in terms of metric tons, as a fail-safe against hyperinflation or other economic calamity. Every year, governments increase their gold reserve by hundreds of tons. Okay, let this sink in. Let this sink in a little bit. Because what they're saying is governments around the world, including our own here in America, are buying gold by the tons as a fail-safe against hyperinflation, but they're recommending us to invest in the debt instruments and not in the gold. Okay, all right, let's continue. Every year, governments increase their gold reserve by hundreds of tons. Gold is the most followed and most globally traded commodity, according to a 2013 Futures Magazine report. For many investors, both institutional and retail, gold is a hedge against inflation or recession. Okay, so the largest gold reserves in the world. United States, 8,133.5 tons. During the height of the Bretton Woods system of international exchange, when the U.S. offered to house the country's gold in exchange for dollars. Decades later, the U.S. still holds the most. Gold makes up over 75% of its foreign reserves. America still holds the most amount of gold, but it's not linked to our money anymore. It used to be. It used to be in 1971, my buddy Richard Nixon took us off the gold standard, which before he did that, there was a certain limit there was a limit on the money that they could just print. And when you had U.S. currency, it meant that you could actually go get your gold. It actually meant that it was backed by gold. It had some value to it. But he took us off the gold standard, and now the government can just print money willy-nilly. And that's what they've been doing, which is why we have all these quantitative easing things going on and on. Okay, number 2, Germany, 3,371 tons. Italy, 2,451 tons. France, 2,436 tons. Russia, 1,909 tons. You hear that? Tons of gold. And they want us investing in this. Okay. Russia overtook China as the 5th largest holder of the yellow metal in 2018. Its increase of its stores has been as an attempt to diversify from American investments. Russia mainly sold U.S. Treasury bonds to buy the bullion. So they're getting rid of this, right? That was Russia. They're getting rid of this, and they're getting this. Okay, and there's a reason for that. All right, let's continue. Gold, the other currency. Okay, this article is from Investopedia. This is this is 3 years ago, July 2016. This talks about how under a free market system, gold is a currency. although it is not often thought of as one. Gold has a price that has a price, and that price will fluctuate relative to other forms of exchange, such as the U.S. dollar, the euro, or the Japanese yen. Gold can be bought and stored, and while it is not often used as a direct payment method for everyday use, it is highly liquid and can be converted to cash in almost any currency with relative ease. If you're watching, the buddy that I just talked to the other day, if I get some gold, how can I get my trash back, my U.S. currency? It's easy, okay? Because, you go to the local gold shop and you say, hey, I want to sell my gold. They will be more than happy to take all the gold you have and give you this. Robert Kiyosaki says, cash is trash. Robert Kiyosaki, yeah, look him up. He's a big gold and silver guy. This article goes on to say, viewing gold as a currency and trading it as such can mitigate risk to paper currency and the economy, but people must be aware that gold is forward-looking. And if one waits until disaster strikes, it may not provide an advantage if it has already moved to a price that reflects a slumping economy. Moral of that story is don't wait. Don't wait until, oh my God, my green trash is really trash now. Let me go get some gold. It'll be too late then. 8 reasons to own gold. I'm not going to go over them all. This is from Investopedia, February 2018. Gold is respected throughout the world for its value and rich history, which has been interwoven into cultures for thousands of years. A history of holding its value. Unlike paper currency, coins, or other assets, gold has maintained its value throughout the ages. People see gold as a way to pass on and preserve their wealth from one generation to the next. All right, another one here. Weakness of the U.S. dollar. Although the U.S. dollar is one of the world's most important reserve currencies, when the value of the dollar falls against other currencies, as it did between 1998 and 2008, this often prompts people to flock to the security of gold, which raises gold prices. The price of gold nearly tripled between 1998 and 2008, reaching the 1,000 an ounce milestone in early 2008 and nearly doubling between 2008 and 2012, hitting around the $1,800 to $1,900 mark. The decline in the U.S. dollar occurred for a number of reasons, including the country's large budget and trade deficits and a large increase in the money supply. I just talked about they printing money willy-nilly. Okay, just printing away. Inflation, another reason to own gold. Gold has historically been an excellent hedge against inflation because its price tends to rise when the cost of living increases. Over the past 50 years, investors have seen gold prices soar and the stock market plunge during high inflation years. And then there's deflation, a period in which prices decrease, business activity slows, and the economy is burdened by excessive debt. Has not been seen globally since the Great Depression in the 1930s. During that time, the relative purchasing power of gold soared, while other prices dropped sharply. And the article goes on to say, the bottom line is gold should be an important part of a diversified investment portfolio because its price increases in response to events that cause the value of paper instruments such as stocks and bonds to decline. Although the price of gold can be volatile in short term, it has always maintained its value over the long term. Through the years, it has served as a hedge against inflation and the erosion of major currencies, and thus is an investment well worth considering. Okay, so like I don't invest in U.S. currency anymore at all. Ex-securities broker, right? I used to invest in securities, and no, I gave it up. And I'm not suggesting that you put all your money into gold. That's what I do. Maybe some silver too. But a portion, you know, some, but diversify, as they say. Okay. Okay, last article, and then we're going to be about done. Check this out. This is really cool. This is really cool. Pay attention to this, okay? You guys have heard of Bitcoin and other cryptocurrencies. I never thought I'd see this happen, but Carrot Bars, where I get my gold from, okay, and here's an example of some other gold. These, see the little gold in there? I don't know if you can see that. Right in the middle there. Bing, bing, bing. It's 1/10 of a gram of gold. This is a whole gram of gold. This is called cash gold. Okay, this is. The other one's just a gold car. But Harold Seitz, the CEO and founder of Carrot Bars, has developed a cryptocurrency, our own cryptocurrency, backed by gold. There's none other like it on the planet, backed by gold, okay? And no, we're not Bitcoin, and no, we're not all these other cryptocurrencies. It's Carrot Bars cryptocurrency, okay? Backed by gold. So, I know people, you know, have their opinions about cryptocurrency. I had mine, you know, because Bitcoin and all the other cryptocurrencies, they're not backed by real physical gold. Carrot Bars cryptocurrency is backed by real physical gold. So, what's going on in the world of banking and cryptocurrency? Well, let me tell you. New York Times, February 14th, 2019, JP Morgan Chase moves to be the first big U.S. bank to own its own cryptocurrency. Okay, in 2017, Jamie Dimon, or however he pronounces his name, JP Morgan Chase's chief executive declared Bitcoin a fraud and said that any employee caught trading it would be fired for being stupid. This article's awesome. I love it. On Thursday, JP Morgan became the first major United States bank to introduce its own digital token for real-world use. He had to eat his words, I guess. Because, okay, this guy didn't like cryptocurrency. Then I don't know if somebody had a talk with him or something, or he came to his senses or whatever. Okay, but cryptocurrency is clearly, it's happening whether we like it or not. Let me finish reading this. So the latest step in Wall Street's evolving approach to the blockchain technology, that's another one that underpins cryptocurrencies like Bitcoin and Ether. Despite questioning Bitcoin's legitimacy, Mr. Dimon has said he recognizes blockchain's potential in the future of global financial system. The bank's token is unlikely to shake up the financial system anytime soon. Because it will be run by JP Morgan, it lacks the fundamental qualities that have made cryptocurrencies so radical. The freedom from middlemen and from regulatory oversight, which is why their cryptocurrency is going to be just as crappy as this. But they're trying to get on board because they're losing the financial game. Our cryptocurrency is backed by real gold. Okay, listen. There's more to come. All right, there's more to come. I just wanted to touch on fiat currency, debt instruments, okay? Hopefully I've got some credibility with this. I used to be a securities broker, okay? I used to sell this crap, mutual funds, okay? And I don't anymore. But if you need to go research yourself, go research. Go see what all the experts are saying. Fiat currency, F-I-A-T, fiat currency, debt instruments. Learn what those things are. And why should you own physical gold? You can store it for free in Germany where the headquarters of Carrot Bars is for free. Or you can have it shipped to your house and put it in your safe. Okay, that's enough for now, folks. I will see you guys next time. Thank you for watching.